Good morning, everybody. It is September 12th, 2022. I hope everybody took a moment to reflect yesterday on 9/11. I did. I put out a message on my Facebook page with the Statue of Liberty. It was a picture that I took, having been in New York, and a link to 7 documentaries for the kids who weren't alive when 9/11 happened. And I thought about doing that because I realized that 2 of the daughters of our friends are going to college this year. They just got up to campus. And the freshmen this year in college weren't even alive when 9/11 happened. So I know a lot of them look at my Facebook page from time to time because I'm friends of their parents. And I just thought I'd give them some perspective. I remember when 9/11 happened. I've told you this story. I tell it every year. I was standing in front of my computer, just got out of the shower, had the radio on, and I heard Steve Zabin, I believe it was, with Bob and Brian on the radio in the morning in Milwaukee. And he goes, "Guys, you got to turn on the news. A plane just hit the World Trade Center." And for a half second, they started to make a joke about it. And Zabin, I'm pretty sure it was Zabin, could have been Dan Patrick, goes, "No, take a look at this." And so I turned on the TV. And not a few minutes later, I'm watching this, and the reporter they had on the ground looks up. He goes, "Oh my God, a second airplane just hit." I don't know how many of you were watching the second airplane hit, because at that point, a lot of us got the news of what was happening. When that second airplane hit, we knew that we were under attack. We didn't quite know on the first airplane, right? Because we had seen little airplanes hit towers before. But when it became confirmed that this was a jetliner, and then there was a second one, it was pretty surreal. So I know that there's people who remember when Ronald Reagan was shot. I remember that. I was in class, and the principal came on, talked about it, said President Reagan's just been shot. And I know there's still people around who, my parents' age, in their 70s, remember when Bobby Kennedy was shot, when Martin Luther King was shot, maybe Malcolm X, and obviously John F. Kennedy. Other things we remember are better, though. We remember when man landed on the moon. So all these things that we remember that are bad, they leave an imprint. But the message that I keep trying to give everybody is that, look, even with the bad things, there's lots of them, we know that the world just keeps getting better. And we can think about that just so many different ways. How about this? We're still here. All these pandemics, all these periods when we didn't have enough food, all the periods when there was big wars, and humanity is still here. We're still building. We're still advancing technologically. We're starting to pick up radio waves in other galaxies, probably of civilizations like us. We're just trying to figure out what is out there. It leads to some of our investment ideas, right? The satellite as a service basket that we have, fourth industrial revolution, clean energy, all these things that make the world better, that have helped us reduce hunger, that have helped us improve education and healthcare, made our standards of living. Well, Charlie Munger just said the other day, from the beginning of his life to now, near the end of his life, he says our standard of living has increased about 5 times, 5-fold. We don't have to go out and pick our food every day. We don't have to go slaughter an animal if we want meat. So many things that are easy for us today. And I remember the story that I've told you before about when I went fishing in Michigan with my friend's grandfather and his friend. They were both in World War II. One was a British pilot and intelligence officer. I don't even remember what my friend's grandfather did. I know he was some sort of intelligence as well, because he came back and worked for the government. And they told the 4 of us who were there, here's something you guys need to remember. The day is going to come when everybody is so fat, dumb, and happy that they fight about nothing. They fight about what other people have rather than appreciating what they have. And I think about all these things in my life, all these experiences, all the things I've seen, all the good people I've talked to, all the good people I'm talking to. And I wonder if we all remember to be optimistic. Because if you're not remembering to be optimistic, if you're not looking on the bright side of life, right? You know that song, always look on the bright side of life, then I think you're probably doing it wrong. I think you're probably missing big opportunities if you're not being an optimist. So that's what I always try to come back around to, even yesterday, because I cannot not relive those couple of minutes and parts of the day that stood out to me. Going into the office, finding out the guy who taught me options, his nephew was supposed to be working in the World Trade Center that day, and he hadn't heard back. Got lucky. He decided to stay in Miami a couple extra days before going back up to his main office. The kid who wasn't in the World Trade Center that day, and there's a lot of stories like this, he was actually the top trader in America for NASDAQ. I believe it was called the quadruple Qs back then. Maybe it was a triple Qs. It was called the Qs. Was he was the biggest market maker for QQQ because it was new. It was only a few years old. Now QQQ, what is that to us? It's one of our biggest investments still. So anyway, I decided to start with that. I thought it made sense. Last year, I believe I had a webinar on 9/11. So this morning, I was sending an email back to Tip Ranks. This reminded me that they still haven't updated a lot of my stuff. This is my ranking going back 7 years with them. And they don't even have the more recent stuff in the more recent stock picks. And they don't even have the most recent stock picks recorded. But out of over 500,000 analysts, I'm ranked 2,460. And I don't think that's analysts. I think that's analysts that have come and gone, and that's all the public portfolios. So between retail investors and professionals, I'm in the top 0.04%, I believe that is. So I'm going to throw out the humble brag. There was a lot of luck. But this is a portfolio that I apparently set up 7 years ago. I'm just going to show you here. I'm going to rank it. I hadn't updated it for apparently a really long time. Till 2 years ago, I put in some picks, but there's 4 years ago before that and even longer. So I've hardly had any picks stuck in here in the last couple of years. But I want to show you what I had in there 7 years ago. NVIDIA, Berkshire Hathaway, Apple, Google, First Solar, Intel, Lockheed Martin, Mosaic. Look at these companies. Imagine if you had bought them, then held them. Let's rank it by return. SunPower, 7 years ago, I was getting into this company. Tesla, NVIDIA, SQM, Travel Centers of America, 5 years ago. SolarEdge, 5 years ago. Mosaic, 7 years ago. Look at those returns. Now let's get into the stinkers. DuPont, right? Here's a list of the companies that ended up being average. But you think of them and you think, oh, they're great. And they trailed the average a little bit. Teladoc, I got crushed on because I just entered it in to enter it in. You know that we haven't really been buying it, but even with basically just kind of adding things to the watch list a couple of years ago, still have pretty good return, right? And I think that this is what you should think about. Look at the holding periods, right? Everybody wants to read trader stuff. Everybody wants to see, well, which way is the market going to go for the next month or two? You know me, I've got words stronger than the farmer words for that. I don't think most people should be trading, not much. Use those option selling techniques to harvest a few percent here and there, right? If you're adding 6 or 7 or 8 or 9 or 10% a year to your income with just these handful of retirement income option trades that I teach you and that I give to you, think that through. You're adding 6, 7, 8, 9, 10% a year to your portfolio, all in income. And by the way, you get to hold on to these stocks for long periods of time. And we know that on the billionaires list, there are basically no short-term traders. None. I think George Soros would come the closest, but he usually holds for over a year. So here is the defense of buy and hold. Here is the defense of position trading. I've sold a lot of these. I didn't record them in here. Looks like I actually probably did sell Mosaic somehow because it doesn't have an alert. I'm not really sure. I don't really use this system very much anymore. I just like that it's showing my legacy performance. And look at all these big winners. And it comes from having bought them before the crowd bought them and then holding on for a while. Usually years. Sometimes quarters, but usually years. So here's my stock screener, TradingView, which I use almost every day. And this is where I get the option selling ideas. So this is my VSL Plus, which is basically all the stocks that I monitor that are either on the very short list, right, our watch list, or have been, or might be, or I just find interesting enough to follow, like a lot of the energy stocks. We take a look at the weekly relative strength index, and we can see there's not a lot that's overbought. Let's flip it over to the monthly. Still not a lot that's overbought. McKesson is the one that shows up as overbought on both lists. So I don't own McKesson. I don't know that I've recommended it in years and years. But if you have McKesson, the technicals are saying that you should be trimming it or selling covered calls. Let's go the other direction. Let's use the monthly chart and look for what's oversold. Black Sky, Spire Global, Planet Labs, Satellogic. You know what that basket is, right? That's our basket of satellite as a service stocks. And they're all pounded into oblivion. Why? It's because they were SPACs. And everybody knows that SPACs are evil, horrible, despicable, deplorable things, right? Not really. They're just companies. And when you research them and you decide this is what I think they're worth over the next 3, 4, 5 years, and a little bit longer maybe, and this is what their Capex cycle looks like, right? We talk about the Capex cycle all the time. Companies look less profitable than they are going to be in the future because they're spending money on building out now. I always use the famous example of Amazon. People would always talk about, well, Amazon's not earning any money, blah, 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 blah. Well, that was because for years they were building warehouses, logistics centers, building out their technology. They weren't in the harvest earnings mode. That wasn't the part of the cycle they were in. If you can't look forward a few years and understand how Capex and revenues and earnings work and how the direction of margins work, you ought not be buying stocks all by yourself. The analysis I give you isn't based on looking backwards. It's based on looking forwards. That's why the numbers that I showed you a few minutes ago are so good. It's because 80 to apparently 99%, but probably 80-something% of the analysis that you see out there is looking backwards. Try driving that way. Don't ever look forward. Just drive with your head turned back and then hit the accelerator and see what happens. That first bend in the road, you're in big trouble. So when I tell you to buy Black Sky, Inspire, and Planet Labs, and Satellogic, and Intel, and Ginkgo Bioworks, I'm telling you that I see something out to the future that is probably pretty positive. And I can measure it based on the Capex and the revenues and the margins, the direction that those things are going. So if revenues are going up, and Capex is scheduled to come down, which means that margins will go up, earnings will increase. What happens when all those backwards-looking people see the earnings hit? They buy the thing that you bought 3 months or 6 months or a year ago. That's what happens. And the smart money starts to drift in ahead of time. If you've been watching Bitcoin, you're starting to understand what's going on. It's the same thing that's been happening with stocks forever. Is the big money tries to hide the fact that they're accumulating. Now, anytime anybody gets a 5% position in a company, they have to report it though. So there are all sorts of stocks out there where the big institutions acquire 3 to 4.9% of a stock, because then they only have to report it on the quarter, not as it's happening. So once they hit 5%, they have to file. Unless they have an exemption, and Buffett always has an exemption. There are not many that get exemptions, so there's only a few dozen. Well, the same thing's happening in Bitcoin. You have all these retail sellers, but yet all that Bitcoin's getting soaked up by somebody. And we see that the institutional holdings are drifting upward, while the retail holdings are drifting downwards. So what does that mean? That means that the institutions, BlackRock, which cut a deal with Coinbase, are accumulating Bitcoin away from the dumb money. Smart money is buying from the dumb money. At some point, the float gets tighter, and the retail money starts to say, oh, look, the price is going up again. I'm going to wait just a little bit. Oh, it went up more. Oh my gosh. Oh, wait just a little bit. Maybe it'll come back to me. It went up again. FOMO, FOMO, FOMO. Rinse and repeat. The big guys take advantage of the little guys. So when some technical analyst comes out there and says, well, the chart says this, and I've never seen anything that worked as well as this, blah, 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 blah. But I don't report my trades to anybody. I just tell you that I'm brilliant. Meanwhile, idiots like me, and you can find me on Motley Fool too from a lot years ago under Kirkydu, Kirkydu. My picks are all over the place going back to 2011. That's when I started putting my picks out publicly. And depending on which system, public platform it's on, somewhere in the top 10% all the time. And apparently with tip ranks, I'm top fraction of a percent. Who knows? Who knows how accurate that is? But you know, you get a ballpark estimate of who's telling you the truth and who's doing good work. So when some analyst, a technical analyst, gives you a narrative about a trade that he thinks is coming, like, well, the technicals say that the market's going to go up 500 or down 500 points in the next couple of months. Wow, that's really helpful. So I want you always to look forward and think a couple levels deeper than all the other knuckleheads that are out there, because we know that most people are bad investors because they look backwards. They maybe think a little bit about today. And I can give you example after example after example. I know a guy who's not the smartest guy in the world, but he got into logistics about 17 or 18 years ago, right around there, right when I met him. He was a broker shipping, and he was like, company I'm working at is okay, but I think I can do it better. He didn't really look too far forward, other than he just thought he could do it better, and he could take some of the margin that management was getting for himself. I can do a little trucking company. There's enough opportunity. We're busy. Another player can get involved. Well, he had no idea what Amazon was about to do to the world. Now this guy is really rich. He's full of himself because he thinks that somehow he did something special. And really all he did is what entrepreneurs do, is look for a little opportunity. And he got lucky with the whole Amazonization of retail. He had no idea that was coming. Amazon carried him. I know another guy that did it about 10 years later, and he's living large right now. Well, all his money is borrowed. The first guy, who started 7-8 years earlier, financed his company with, just borrowed money to buy a couple trucks, used his credit card to buy some computers. He was maybe $100,000 in debt at one point. Now he makes over $1 million a year. Now, if Amazon doesn't come along, give him a little bit of luck, what happens to him? I don't know. He's a pretty bright guy. I think he would have made it. I don't think he'd be worth 8 figures, though. So when we look at our stocks, we have to think out forward. What could the positive surprises be? Ginkgo Bioworks. What could the positive surprises be? We've talked about this. The satellite as a service. What could be the barrier to entry to even competing with them in a couple of years, right? There's huge first mover advantage for the satellite as a service stocks, because at some point the governments are going to say stop launching stuff. Intel, barriers to entry, and they get government support. So as we think about our 4-step process, what are the big secular trends? Who's getting support from government and central banks? Company fundamentals, and then technicals. In that order. Start with the big secular trends. Move on to what government is pro and con. Figure out which industries are going to have headwinds, tailwinds. Which companies are set up financially to do well and have great technology and leadership. Leadership can't be understated. And then the last thing you do is you apply the technicals, what we're looking at right now. Say, okay, I know that Ginkgo Bioworks is likely to do really well if A, B, or C happens. But what if A and B happen? What if A, B, and C happen? And if none of those things happen, they probably chop along and there's not a lot of downside. And that's the shell game that you want to play. You want to play a shell game where the ball represents winning, but the empty shells represent a tie. And what if you can play a shell game where there's 2 balls and you win if you pick either one of those? And if you lift up the one without the ball, you have to play again. It's a pretty good game. Try to find situations where you can't lose horribly. The upside is big. You may break even or roughly break even a lot of times. Now, there are still going to be stinkers in there because we're fallible. I've had a couple of stinkers the last couple of years. Throw them out, move on. And trust that 3 or 4 out of 5 times your ideas are pretty good. For me, the track record's been better because I live this stuff. And I actually do what Jim Rogers told me to do over 2 decades ago. I read everything. When I disappear, unless I tell you I'm playing poker with the grandkids, traveling, which is a good, pretty good amount of time, I'm reading. Read till 1 a.m. last night. And you can see from some of my tweets and some of the things I put in the chat room, the hours that I'm reading. I have several sources, AIs that are driving them, to give me updates on companies every single day. Big list of it. I go through that. And the Stocks of the Week report that I'm trying to create is based on all that AI-driven research or notes. It's really notes that I turn into research. That's where I get these ideas from. So here are a whole bunch that are oversold on the monthly RSI. By now, I presume you know what monthly and weekly and daily RSI are. Monthly measures at the end of the month. That's the time interval used. Weekly, every Friday at the close. Daily at the close. 4 hours, every 4 hours. Pretty easy to follow. So we have all these stocks that are oversold or close to oversold. And not all of them are companies that I recommend. But they're companies that caught my eye at some point and I put them in here. You start to ask yourself questions. Okay, of these companies that are oversold, now let's work the other direction from technical back up to secular trends. You go to the fundamentals. Who's going to do all right fundamentally? Why did I tell you I didn't buy Coinbase for a long time, even though they're on the list? Does anybody remember what I told you? I wasn't sure how to value them. I didn't know the answer, so I didn't play. Now, what makes me like Coinbase more today than I did several months ago? Who did they get in bed with? BlackRock. Biggest ETF investor in the world, biggest institutional investor in the world. chose Coinbase to handle their cryptocurrency trades. And I told you the reason that Coinbase would probably be a survivor is because why? They were the biggest and already the most integrated with the federal government. Even though they butt heads with the federal government did not step in and squish them. They said, we want you to do this. You got to think about that. This is something we're looking at. Keep up with us. And they have a pretty conservative balance sheet. So Coinbase is a pretty interesting company. I'm not telling you to buy it. But when you take a look at this chart, you realize that they're way up here at 300, and now they're under 100. They got all the way down into our buy zone and a little bit below. And now look at that new trend. If you're an aggressive investor, and this is definitely an aggressive stock, and you get a dip, you probably want to buy it. If it gets back into the 60s, you probably want to buy it. Or at some point, maybe sell cash secured puts. Maybe the cash secured puts have such a big premium because of the volatility. Maybe there's cash secured puts we can sell now. I'll take a look. I'll put out the RIO and we'll have an idea here. But you saw this big collapse a little further than I thought. Now it's coming back. And this is pretty much all since the BlackRock news, right? So those are the things that we need to keep track of. We just change this back to weekly. If you believe we're in a bull market again, you can start buying a lot of the ones on our list. Warner Brothers Discovery, for sure. This is such an easy fundamental story. We know that as they save money, and they're way ahead of schedule on saving money from the merger, Discovery plus Warner Brothers. They were targeting $3 billion of savings. They're going to be closer to 5 or 6. They're just going to be pounding down debt over the next several years. And if you watch TV, I guarantee you're watching something on HBO or Discovery, whether it's that, the Indian wedding show, which I've been introduced to recently, where they plan marriages, or whether it's House of Dragon, which is part of the Game of Thrones. Their content is a big deal, just like Netflix is, Comcast, ABC. There's more consolidation coming in this industry, and they're going to wring out a lot of the things that were costing them money as they built out for streaming. And they're getting to the part of the Capex cycle where first they reduce debt, and then they're going to start to buy back shares and pay dividends. The share prices will go up. Warner Brothers Discovery is ahead in that process. I think Comcast has some interesting things coming too. You know that. I don't know what Netflix is going to do. Still makes sense to me that they merge with Comcast, but we'll see. Personalities, right? Personalities. Sometimes that doesn't allow a deal. Intel oversold on the monthly and the weekly. If you don't own Intel yet, and it doesn't matter what type of investor you are, conservative, aggressive, retired, growthy, you need to have a position in Intel because they're going to cut the gap dramatically with Taiwan Semiconductor as a fabricator for all the other semiconductor companies. Will they catch Taiwan Semiconductor in market cap? Well, it's sort of like Tesla and Ford. Does Tesla deserve to be $800 billion company? Does Ford deserve to be a $50 billion company? The answer is somewhere in the middle. So if Ford goes up to $500 billion and Tesla goes down to $500 billion, that makes a lot of sense to me. That's where they meet. Well, Intel and Taiwan Semiconductor probably have to meet somewhere between the price points for where they are now, or maybe Intel just gets to where Taiwan Semiconductor is because they have a big advantage in America. Somebody says that, my technical analyst says that Intel can go down to 26. Big deal. Could, but Elliott Wave, just like any other technical analysis, is not that important when you have a great company that is dramatically overvalued. Who cares about a couple of dollars one way or the other? Really, who cares? I showed you the performance. Scale in gradually. Don't try to be perfect. Don't limit yourself to one buy because if you miss it, you're screwed. You scale in. So if you don't own Intel right now and you're not buying it because some technical analyst, whether it's mine or anybody else's, says, well, it could go down to 26 because that's what my chart says, you're doing it wrong. Now, if you already own Intel, you know my theory on that, which is you don't scale in again until you have a pretty healthy double-digit difference in the prices from where you did buy it and where you're going to buy it next. Because what's the point of averaging in if you don't change your cost basis? You want to actually change your average price. So I bought into Intel in the low 40s. I think I've got a $32 put out there. Well, that's a 25% difference. And by the way, I collected some premium. So when you scale in slowly and far apart. And does the technical analysis help? Sure. But the fundamentals are way more important long term. In the short term, the stock market is a popularity contest. What is it in the long term? It's a weighing machine, right? Some guy in Omaha said something like that. I show these technicals because this relative strength index is the easiest thing for anybody to use. It is a momentum indicator that tells you the direction based on volume and price action. It is a great quantitative signal. It works, and it works over and over and over again because it gives you a little bit of an early warning on when more money is coming out of a holding of an asset, meaning it's in distribution, meaning the price will go down. And it gives you a heads up that there's money coming in, which means the price will probably go up. When I say probably, it's like 90% plus. Relative strength index is the easiest thing for you to use. You use the weekly and the monthly to get an idea. If you switch over to the daily and the 4-hour charts, you better understand what you're doing, because then you're introducing all sorts of other variables, because you're looking at a shorter time frame where you're trying to be more precise. Precision is less important than accuracy over the long run. Because if you buy into Warner Brothers or Intel or whoever 3 or 4 times at relatively spread out prices, probably on both sides of the trough, I bought too high the first time. Then you buy it again and you start to wonder, was that the low? And it starts to go up. You're like, well, let's see what happens. It just starts to keep going up and up and up, and the RSI flips over on you. You're like, more and more and more. Well, I better buy before it gets to 60 and 70. Well, now I start buying in here. And you end up buying probably at a similar price level twice, both sides of the trough, right? Your chart goes like this. Maybe we bought this here, got lucky and bought it down here, starts going up, and you're like, oh, it looks like it might break out. Well, let's just wait a second. It's not out of the buy zone yet. You get a pullback, you buy it. And if it looks like it's going to break out and the inflection of the chart starts going up more, you start recognizing FOMO. Maybe you add one more piece. Or maybe the 2 pieces you got are enough. But if you're not trusting your fundamental analysis to start buying in here, because good companies get positive surprises. This is one reason I tell everybody, don't ever bet against a good company, ever, because the news is more likely to be positive than negative. There's enough shit stocks out there that if you want to bet against something, bet against those, because the surprises are likely to be negative. I tell people all the time who tell me, well, I bought some puts on Apple because I thought it was going to go down. It's freaking Apple. Don't ever bet against Apple. Not saying you always have to buy it, but you should never, ever bet against Apple or Google or Amazon, ever, because the surprises are likely to be positive. If you think that sector is going to get beat up for a while, find a shitty competitor to Apple or a shitty competitor to Amazon, whatever. Never bet against a great company. Never bet on a crappy company. Pretty easy. Crappy companies are more likely to have negative surprises. That's why you bet against them. You never bet on them. And great companies are more likely to have positive surprises, which is why you bet on them and never bet against them, right? That's just the way it is. All right. I'm going to go through this. You heard what I talked about. If you still haven't gotten into some of these stocks on here that I've talked about, you should be focusing on them. All you have to do is go back to the last couple retirement income options. Say, okay, what do we have to do to update this trade? Well, for Intel, all you do is ask for more money. December 35 is still what you want. Palantir, Warner Brothers, right? Just ask for more money on the premium. That's all you need to do. All right. Any questions before I pull the plug and I go rescue my succulents? Because we got 5.5 inches of rain yesterday, and my succulents are way too wet, so I have to go to Home Depot and get some desert soil, and I'm going to replant about 20 plants here real quick. No, nothing. Nobody has a question. I find that hard to believe. But okay, going once, going twice. Yes, 5.5 inches of rain in one day is unusual in Wisconsin. I mean, we get it once or twice a year. It's usually in the spring. But we actually had a little bit of leakage in one of our sliding patio doors leaked a little bit because the rain was coming in so horizontally that apparently I need to caulk something. So, all right, everybody, have a great day. Take a look at the old articles. I'll put some new ones up today. I'm babysitting a lot this week for a couple of reasons. I have a bunch of updates coming Thursday for macro trends or macro dashes. Macro trends was taken, so it's macro dashes. And I think we're going to get more and more clarity from the Fed next week. I would be surprised if we don't get 0.75 point from them with some dovish talk. That's what I think. They might do a 0.5 point and some dovish talk. Remember what I said last week about Lil Vladdy finding his demise? I've mentioned it a few times in recent months. You're going to see some big changes out of what's going on with Russia and Ukraine pretty soon. And the first one's probably going to be bad. And then after that, it'll probably get better. So keep an eye on that. I still think the next 3 months or so are going to be choppy. But if we get the choppiness and we get one more correction, boy, oh boy, I tell you what, this great divergence that I keep talking about, where you want to be in the fourth industrial revolution technology and industry and the industrial real estate and clean energy, I just think you're going to make so much money investing in those things. Talk to that family office again today by email. I'm going to be working with them a little bit. There's 2 other private equity firms in Milwaukee that I've been talking to, and you know that I meet with a lot of people when I travel. And I will tell you the story that I'm talking to you about. Remember, if you just do this search: decarbonization, decentralization, digitization. Apparently, there's a Morgan Stanley report. Just take a look at what's going on. It's all over the place. This is what to be into. Decentralization, multifaceted, has to do with energy, but also finance. Digitization is everything related to AI and IoT and edge computing and all the things that technology is impacting in industry. And then decarbonization, which is clean energy plus all the different efficiencies and carbon capture and everything else. This is not something I just threw out there. This is a big theme. It's been around for years, and retail investors ignore it because they don't read this stuff. This report from Ernst & Young is one of the best ones out there. So if nothing else, go read this report from Ernst & Young from 3 years ago. Lays things out. You are probably on your last chance to buy a lot of this stuff cheap, in my opinion. Prices are going to start going up once some of this energy and inflation uncertainty is gone. All right. Have a great rest of the week. I will see you on Thursday. Keep an eye out for 3 or 4 articles between now and then.